Hi folks, this is Sean Hyman from Chart of the Day, and I just want to talk to you about looking to the majors to see what will be brewing in the crosses. And there's a notable change happening. It appears in dollar yen. Now, every once in a while, you can have a break of a downtrend line and then a fake out, and then head back lower. But since this pair has not, it has honored this downtrend line, which is this red line on the daily chart, daily 1-year chart of the dollar yen. There's a good chance that this is going to be honored. Now, the pair could come back, more towards where it broke out and then launch again, or and have its real rise higher, or it could just take off from here if this is a bona fide break, and it appears that it is, because it's broken the 200-day SMA simple moving average and also its daily downtrend line, and it had held some higher lows here as well, higher low here, so lower low, higher low, and then we had a high here, and we've had a higher high here. So there's a good chance that we're actually in an actual trend change here. Another thing to note on this particular pair is on the 4-hour chart. Let me just tell you what, I'll remove both of these just to make that easier. Take that off, and then take the lines off as well. There we go. And what you'll see is that there was basically a 3-week consolidation that had happened right in through here. Just kind of a sideways move. And let me draw the bottom of it right in through here. So there's about 3 weeks of consolidation. Normally when you have really long, unusually long periods of consolidation, when you do get a breakout, the breakout is very directional and very sizable. And on another note, Elliott waivers would call this the top of wave 1, meaning this move that happened right here. The sideways consolidation would be a wave 2, and that would end somewhere along in here. And you could even debate some of the Elliott waivers would say there's many 1, 2, 3, 4, 5 in a diagonal that ended about here. So arguably it could be here or here. And then way up here, even far above where this chart would go, you would have the end of wave 3. And in Elliott wave, waves go in 5 waves up and 3 waves down. So it goes 1, 2, 3, 4, 5, and then a correction of A, B, C. And so you've got one big move up here, consolidated for several weeks, long unusual period of consolidation. Boom, comes out of that, headed towards 3. Now remember, I'm not saying 3 ends here. I couldn't put it any higher in it showing the chart. It actually could go even higher than that. But however high 3 goes, and then it pulls back for a 4, and then another big launch. So so when you look at this smaller time frame, this 4-hour chart, it appears as though there's probably going to be sustainability to this breakout. Now, again, could we get a sizable pullback before we head back? Absolutely. Matter of fact, if we did end wave 3 and pull back, the rule of wave 4 is that it can't run past the top of wave 1. So it would have to stop somewhere in here where this spike is, more than likely right around in this area where I've got 1, which is give or take a little bit on either side of 91. And so with all that said, that's what's happening in the majors. So the yen is getting very weak in proportion to the dollar. Let's go back to our daily chart, and let's go and check out a couple of yen crosses as well. The Canadian dollar has been exceptionally strong here lately, and matter of fact, even the last couple of days, their central banker has talked about, even before the numbers have come out, he's talked about how GDP is growing faster than he's thought originally, and that they'd originally projected. And inflation, the same thing for it. Inflation is growing faster than they had thought as well. And so the economy's picking up steam, and several of the speeches from the central bank lately have told of that. But you basically had a top that was right here. It stopped here. CAD yen on the daily chart again stopped here, and then has taken this out at least on a spike, not on a closing basis, but on a spike. And as of the day that this is being recorded, which this is Thursday, it actually took out and went to yearly, stock traders would call this 52-week high, 1-year high, and has pulled back. And there's a good possibility that we'll either launch higher from here, or even if we do have a pullback, that it could be, only back to the 88 or 89 level, and then the real big, powerful thrust that does hold above the old highs actually is sustainable. And so that's one thing to watch for. And CAD yen in New Zealand yen is looking, more bullish as well. Now, not as bullish as CAD yen, because remember, CAD yen's already embarking upon new highs, and this one has still yet to fully reach its old highs. But I fully believe that it stands a really good chance in the near term of reaching this downward corrective line. So we're still in an upward trend, but corrected downward, and then we could likely head upward again on yen weakness and New Zealand dollar strength. Because there's many out there that feel that many of the economists are looking for the New Zealand Central Bank to raise rates as soon as maybe June or so. And so if that were to happen, the currency would actually start running up a little bit ahead of time, more than likely. That's what's typical anyway. And so in preparation for that, it could easily come up here, kind of bounce off of it a time or two, and then one of the next runs actually bust through and head higher. So CAD yen looks particularly bullish because it's already taken out new highs. Even though they didn't close above them, they're still probably going to hold high. And then, and coupled with the central bank's outlook, and then New Zealand could start its interest rate hiking cycle, maybe around June or so. And so a lot of traders are starting to position in these pullbacks for a potential break there. And when people get in at these levels, they've got a decent amount of run before it even goes back to the top of the correction, even if it were to hook over and head lower and we were wrong on it. But this is headed significantly higher as well. And so, and I think it stands a good chance of hitting that line again, and if not exceeding it. And so, looking at the majors tells you a whole lot about what's going on in the crosses. Also, want to point out too that basically there was about a triple bottoming here along the area of 61, right here, and right here. And so you've got three major groupings of areas where it's bottomed and bounced back. So with that solid of a support, there's a really good chance of this pair heading back towards this corrective line and eventually even further. And so again, that's something very bullish. So you could say triple bottom, that's kind of spaced out, or you could even say double bottom if you're going very near term and looking at it that way. Double bottoms form a W on the chart, which you can see forming there. This will likely going up and hit 67 or close to it before we actually get to this corrective resistance, and then possibly on higher once it hits it and sees how it deals with it initially. And it might pull back from it and then head higher after that. But New Zealand yen and CAD yen, and the way I got tipped off to those two potential trades was looking actually at what was happening in dollar yen, one of the majors. Because remember, there's a lot of money flows happening in those majors, and so if you see significant breaks happen in the majors, there's a reason why, and it's going to spill over into these crosses. And remember, the beauty of the crosses are the crosses typically travel further and many times faster than the majors, and they usually have more sustainable trends as well. And so that's why we would want to take the play in the crosses and stand a huge chance of success there. So in some upcoming trades in my currency cross trader service, I'm very likely to have some trades in some of these yen crosses just from what I've seen happening there in dollar yen. And so I hope you'll join us. Hope you join the service. You can find us at worldcurrencywatch.com, and you can contact us there. And find out more about the Currency Cross Trader service. Contact our customer service team, Sarah, Jesse, other ones on the customer service team. Any one of those would be more than happy to give you the details of my track record, the ins and outs of the service. We typically have a weekly article and a weekly that goes through the trade, and also the trade alerts that happen every time we see a trade as well, which are normally swing trades that happen over days to weeks, and we rack up some very sizable gains in that. Hey, thanks so much for watching. Bye bye.